Hey there! Let's be real. Student loans can feel like a giant, confusing monster lurking in your financial closet. Interest rates, repayment plans, save this, forgiveness that. It's enough to make anyone's head spin. If you've been feeling stressed, overwhelmed, or just plain lost when it comes to your student debt, you are absolutely not alone. Millions of Americans are navigating this same complex landscape. But here's the good news. It doesn't have to be a nightmare. Today, we're going to demystify it all. We're diving deep into Student Loan Repayment 101, exploring everything from the game-changing save plan to various forgiveness options and giving you concrete strategies to manage your debt and hopefully save thousands. My goal is to empower you to take control, understand your options, and walk away feeling confident about your financial future. Ready to conquer those loans? Let's get into it. First things first, let's understand the battlefield. The biggest distinction you need to make is between federal student loans and private student loans. Federal loans, issued by the government, come with far more protections and flexible repayment options, like income-driven plans and pathways to forgiveness. Private loans, on the other hand, are from banks or other financial institutions. They're generally less flexible and rarely offer forgiveness. Our focus today will primarily be on federal student loans because that's where most of the exciting and money-saving strategies lie. Within federal loans, there are several standard repayment plans. The standard 10-year plan is what most people start with, but it might not be the best fit for your budget. That's where income-driven repayment, or IDR plans, come in. These plans adjust your monthly payment based on your income and family size, making your payments more manageable. There are a few different IDR plans, but one has been a major game changer recently, and that's the SAVE plan. Let's dig into that next. All right, let's talk about the SAVE plan. SAVE stands for Saving on a Valuable Education, and it's truly a big deal for millions of borrowers. This plan replaced the old repay plan and offers the lowest monthly payments of any IDR plan for most borrowers. Here's why it's so impactful. Firstly, your monthly payment is calculated based on a larger percentage of your discretionary income. For undergraduate loans, your payment can be as low as 5% of your discretionary income, down from 10% on other plans. For graduate loans, it's still 10%, and for a mix of both, it's a weighted average. But the real kicker, any unpaid interest that accrues after your payment is made is completely waived. This means your loan balance won't grow as long as you make your reduced monthly payments, even if those payments are zero rules. This is huge because for so long, people on IDR plans saw their balances explode due to accruing interest. Who qualifies? Almost anyone with federal student loans is eligible, except for Parent Plus loans. You simply apply through studentaid.gov. It's crucial to recalculate your payment annually, or if your income or family size changes, many people will see their payments cut in half or even drop to zero. If you haven't looked into the SAVE plan, stop what you're doing after this video and check it out. Beyond just lowering your payments, what if you could eliminate your debt entirely? That's where forgiveness programs come in. The two big ones for federal loans are Public Service Loan Forgiveness, or PSLF, and Income-Driven Repayment Forgiveness. Let's start with PSLF. This program is a lifeline for individuals working in public service. That means government organizations at any level, federal, state, local, tribal, or eligible non-profit organizations. If you make 120 qualifying monthly payments while working full-time for a qualifying employer, your remaining federal direct loan balance is forgiven tax-free. The payments don't have to be consecutive, and you must be on a qualifying IDR plan. It's not easy, but it's incredibly powerful for those dedicated to public service. You need to submit an employer certification form annually to track your progress. Don't wait until the end. Then there's IDR forgiveness. All IDR plans, including SAVE, offer forgiveness after a certain number of payments, typically 20 or 25 years, depending on the plan and when you took out your loans. The SAVE plan actually accelerates this for some borrowers, with forgiveness as early as 10 years for original loan balances under $12,000, adding an additional year for every additional $1,000 borrowed. So, for example, if you borrowed $15,000, you'd get forgiveness after 13 years. The key here is consistent payments on an IDR plan. While PSLF forgiveness is tax-free, IDR forgiveness can be taxable as income at the federal level, though this has been waived until 2025. It's a complex area, so always consult a tax professional. Navigating specific programs is great, but what about general smart strategies? First, know your servicer. That's the company that handles your loan payments. They are your primary point of contact. Next, stay organized. Keep track of your loan types, balances, interest rates, and payment history. A simple spreadsheet can be a lifesaver. Regularly check your loan status on studentaid.gov. Consider consolidating your federal loans if you have multiple types. Consolidation can simplify payments and sometimes qualify you for more IDR options, though it does reset your payment count for forgiveness programs, so be cautious. Always prioritize federal loans over private loans if you're making extra payments, as federal loans offer more protection. And speaking of extra payments, if you can afford it, target loans with the highest interest rates first. This is often called the debt avalanche method and can save you the most money over time. But only do this if you're comfortable with your emergency fund and other financial goals. Finally, beware of scams. There are many companies out there promising to fix your loans for a fee. You can do everything discussed today for free through Student Aid. Gov, never pay for what you can do yourself. Life happens and sometimes you just can't make your payments. Federal loans offer options for temporary relief, deferment, and forbearance. Deferment is generally better as interest may not accrue on some subsidized loans during this period. You might qualify for deferment if you're unemployed, in school, or experiencing economic hardship. Forbearance is another option, allowing you to temporarily stop or reduce payments, but interest will typically accrue on all loan types. Both of these options should be used as a last resort and for short periods, as they can significantly increase the total cost of your loan due to accruing interest. The absolute worst-case scenario is defaulting on your loan. This happens if you miss too many payments, typically 270 days past, due for federal loans. Defaulting has severe consequences. Your credit score will tank, your wages can be garnished, and your tax refunds can be withheld. It's a financial hole you want to avoid at all costs. If you're struggling, contact your loan servicer immediately. They can help you explore IDR plans, deferment, or forbearance before you hit default. Communication is key. We covered a lot today, from the incredible SAVE plan and powerful forgiveness options like PSLF to smart repayment strategies and what to do when you hit a bump in the road. My biggest takeaway for you is this: don't let your student loans control you. Take the time to understand your options. Visit studentaid.gov. That's your official free resource for everything federal student loans. Explore the SAVE plan, check if you qualify for PSLF, and choose a repayment strategy that works for your budget and your goals. Taking control of your student loan repayment isn't just about saving money, it's about reducing stress, gaining financial clarity, and building a stronger foundation for your future. You've got this. If this video helped you feel more confident about your student loans, please hit that like button, subscribe for more financial wisdom, and share it with anyone who's still scratching their head about their debt. And let me know in the comments, what's your biggest student loan victory or challenge? I'd love to hear from you. Thanks for watching, and I'll see you in the next one.